Paytm has reported its first ever consolidated net profit at over 120 crore rupees. This against a net loss of 840 crore rupees in the same quarter last year. Meanwhile, interesting announcements coming from Vijay Shekhar Sharma, including the fact that marketing costs have been halved to under 100 crore rupees. Also, employee benefits are now being cut by as much as 300 crore rupees. And overall, we are also seeing that the average monthly transacting user base has reached 7.4 crore transactions. So overall, is it too early yet to call it a turnaround for Vijay Shekhar Sharma and a turnaround for Paytm? And what do these numbers really mean for investors who have been taking those long bets on Paytm, Mohit?
Karthik, very interesting set of results. Look, honestly, I think the action in the new age consumption stocks, whether be Eternal, whether be Paytm, has been extremely significant for last few days. Look, and I think everyone in the market is kind of watching these stocks, the whole pack per se. I think the two results, one of Eternal and second of Paytm, have kind of picked up the entire pack and the energy around these names once again, and they're all buzzing, right? Uh, Turning PAT profitable is a huge milestone by all stretches of imagination. And though the street was expecting it to come out in this quarter, but it's a very decent number, very healthy number, and the guidance is also very good, right? They're giving a guidance of EBITDA on around, if I'm not wrong, around 16 to 18% guidance around EBITDA for coming quarters, right? So my sense is one will have to honestly look from trading perspective. It's a great call. It's a great thing. We have seen a lot of brokerage houses. Uh, um, giving a revised upward target price for Paytm. So I think that all augurs very well. But from a sustainability perspective, one will have to watch out for at least a 2-3 quarter kind of a run rate in terms of what they do, how they end up. Look, reducing employee costs, reducing expenses is one way of turning PAT profitable, but the other and the more sustainable way is to increase your revenues and to have a healthy run rate going ahead, right? So I'll be watching out for that. But yeah, I think one with high risk appetite can perhaps take a look at these names now.
Surprisingly, Mohit, the stock seems to be down this morning. In fact, it's down about 0.2% or so.
Oh.
Why do you think investors are not reacting favorably to at least the profitability that Paytm has shown for the first time?
I'm pretty surprised, Karthik, if the stock is down. Honestly, I think I
Yeah,
saw the first look in the morning at around 3.5% up in the morning. And
right.
though I'm not on the screen right now, so I can't track it. But if the stock is down, I'm pretty surprised. Perhaps it could be a bout of profit taking. Maybe it's like buy on rumor and sell on news kind of a thing which is happening out there, and maybe some profit is getting off the table. But I think, look, it's not a bad, as I said, for a high risk investor, it just might not be a bad trade. You will obviously need the overall market sentiment to work in favor for it. But if the commentary is sustainable or something is sustainable, that's what the market might be watching out for. As I said, Karthik, I think, look, reducing managerial expenses and reducing other expenses and marketing expenses and then turning profitable is one thing, but turning profitable with a sustainable run rate and a sustainable revenue base is something else, right? So I'm not sure if market has read something in the fine prints of the entire results, and maybe that's where this is happening. I'll have to look out for that. But yeah, as I said, I think I'll watch out for another 2-3 quarters to firm up my views on these names.